The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it's another exciting day at the headquarters of Technical Trading and Investing, TFNN.com. Can I say that again? TFNN.com. Your headquarters for technical trading and investing. We've got a day out here that the volume has just gone to hell in a handbasket. We're talking 1.6 billion shares at 2:07 Eastern Time. It's stopped, folks. This is the end of volume, and the question is whether or not we had a high or we've had a high here today. But there's certainly no volume up, and there's no volume down in this market, at least at the moment. And normally this is where you have very, very volatile markets that start right after this. When volume goes light, normally the words on Wall Street are "don't be short a quiet market." When you're at previous peaks and you get no volume, it is a big time to be very scared. And we'll talk about that. Today is August 5th, and Shark Week started last night. For those that have the Discovery Channel, always kind of an interesting week. I think I watched the first couple of seasons they did it. I thought it was interesting. Not a whole lot. Ooh, I don't know what that was. Anyway, interesting week, but it was interesting week. I guess the only thing that Shark Week now makes me think of is Kelsey Grammer. Most people don't know it, but he's had a fairly tragic life. Only person I know with a life that was more with more tragedy surrounding him was Roy Orbison. Kelsey Grammer's two half brothers eaten by sharks. Not very funny. Two half brothers eaten by sharks. He's got a sister eaten by a shark, a sister that was killed. I tell you what, the only thing that would probably be a bad week is when you turn the channel and you're Kelsey Grammer and it's Shark Week, the thing that ate both your brothers. I always think about him during Shark Week for some reason. But it's interesting. Of course, Roy Orbison. Boy, you want to talk about a scarred life. Very early on, he had, both, I think it was either both kids and his wife or just both kids. He had two very young kids that just built a huge mansion that had burnt down, lost his children and his wife. Just horrifically bad timing. But I always think of Kelsey Grammer. I always liked his shows, but when you know somebody has been in two separate events. His brothers, his half-brothers were both eaten by sharks in one event, and a sister in the other, and then a sister actually killed. Boy, I tell you what, you think that maybe his dad did something wrong. Anyway, we are going to go to a good day out here. We're trading out in the high 1705 area of the S&P cash. But again, there's just no volume whatsoever. 1.65 billion shares on the consolidated New York Stock Exchange tape. I think we have a low volume when we come in at 2.2. We've got a market that has little or no volume. And we'll be talking about that more today. The Fed Fisher, the market was starting to try to move up earlier in the morning. Fed Fisher came out and urged his colleagues at last week's Fed policy meeting to gird our loins to make our first move this fall. And what he was talking about was tapering. The whole gird our loins thing, I don't like his mixed metaphors. Feels a little creepy to me. But who knows? Gird our loins to make our first move. That whole girding my loins is stuck in my craw all weekend long. But what can you say? Didn't specify whether it was September or October meeting, but it looks like September or October will be the first month that we start tapering, at least if you believe in the Texas Fed and Fisher, who's basically saying that they are going to taper. So it is going to be weird. Anyway, that is one thing. Other things going on in the marketplace. HBC Holdings is down today. HBC is the symbol. Pretty much a big deal over there. Disappointing earnings. Let's see if I can, probably should have popped a chart up about that real quick. HBC. Take a look at that. Nice little drop, but I've been looking at this one for a while. I wanted it to go just a little higher. But everything that this thing was saying was that a top was close in, and that is the first major high, which came on January 30th, had 1.9 million shares at 57.37. It went over that with 1.9 million shares again, May 20th, setting up that high at 58.71. But Friday, 1.1 million shares. And energy really did not increase. This thing looks like it is in a nice big trading range from about that $58 level down to the low $50 level. And see if there was anything else I wanted to talk about today. Oh, CBS and Time Warner are fighting it out. Probably ought to look at TWC. Of course, I was in this business, dealt with a lot of cable people, head-ins and broadcasters, and the operators of cable. And we dealt with everybody from the smallest cable company with 200 people hooked to it to Time Warner and the bigger ones. Our company actually came from a division of Scientific Atlanta that used to make lots of those cable boxes. We always called the cable people ditch diggers because they didn't care whether or not anything actually worked well, only that it worked and satisfied whatever the minimum standards the FCC ever wanted. It didn't matter if the equipment would last, and therefore if you built anything decent, it was always a hard sell. A lot easier to go to control rooms and say, hey, I had a hot product and it works real well. And the engineers, most of these guys, were always fighting to try to get a good, clean signal out. And why they were tough on you, they at least knew when you had a decent product. The cable companies were less than impressed and were only interested if they could screw you over. So I've never been a big fan for the business practice and lack of ethics that most of these big cable companies have ever shown. But they weren't too much removed from the original long distance cable, long distance phone company companies like WorldCom and some of these other ones that ended up blowing up spectacularly. All of them were ethically challenged. Anyway, of course, we've got the problem with Time Warner not getting access to CBS affiliate feeds, and it's gone on for about 3 days here. Don't see a lot of movement yet. The problem, I guess, that CBS and Time Warner are having is Time Warner saying, hey, this Arrow company, they don't have to pay you a penny. They figured a way around it. And to tell you the truth, we're going to find a way around it. What I think everybody can figure out is that broadcasters like CBS, or at least the major ones, Fox, CBS, ABC, NBC, all get about 10% of the revenues from kickbacks up from cable companies, even though you can get these things for free on rabbit ears or now in the HD TV world. I actually built my own antenna. You can find it on the internet, a coat hanger antenna for HD TV that you can build for about $10. It works better than just about any other HD TV antenna for less than $150. So I've got that for an emergency, especially down here in Florida where we could lose cable. It would not be beyond the scope that we'd be a long term off. Of course, I get about 30 stations, about 20 of them Spanish. So I don't know if they're going to do me a whole lot of good. Yeah. Someone posted in the den. Yeah, and I think it doesn't say anything in there, but maybe you go a little bit farther about his sister getting eaten and another sister getting killed by murderers. Yeah, someone posted in there. Pretty tragic life for a comedian, but seems like a lot of comedians are like that. Anyway, Time Warner, not a whole lot of movement out here. I don't really suspect that this is going to go too far before the cable companies at least start to buckle. But they're just trying to get a little less money. Of course, if they went over the airwaves, then they don't have to do anything. My only thought is maybe they will start trying to do the same thing that Arrow did. Fox itself has said that if this Arrow company continues to be able to do what they do, that they will sell all their broadcast stations and just become a cable station. I don't know if that's so true, because there'd be another company that came in right behind it that was more than willing to put up with the FCC and retransmission rights to get a large part of the audience that doesn't have cable or doesn't pay for it. Those people probably don't buy as much, but they still do buy, and most of them don't have DVRs to quickly bypass commercials. So anyway, going to be a little bit just trying to see if there's anything going on out here. This market is flat as a pancake. Wanted to look at Apple out here. This thing is moving, but again, volume, 8 million shares. Volume is pretty light out here. This thing has been going against this 465 high, which was the last major high. You can also say that it was going against the 469 highs out here that had 17 million shares. But whether you look at 469, which we've gone through today, or 465, this move back up has not had any strength, and it looks pretty much like the rest of the NASDAQ, except this one is up here. And, I'm going to, let's even be nice that March 25th high at 469.95, 17 million shares. We got 8.1 as we go through today. So just, the energy on the way up, except a single day, not a lot of volume, and continues to look like this thing has a broader trading range of probably 470 back down to this 385, which has not been tested. So we'll be watching Apple very closely here. We'll be back in just a few minutes. Give me a call at 877-927-6648. That's 877-927-6648.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, it is a Shark Week, and we'll talk about a little bit about it. Somebody IM'd me and asked me how I knew so much about Kelsey Grammer, and of course I worked in for mostly from 1991, 92. We started getting out of the cable business and started getting into the special effects business. I don't remember exactly the dates, but I think it probably had to be around 1992 that I ended up spending weeks, months at a time in San Francisco and around Silicon Valley. And if you ever go to Pier 45 down there on Fisherman's Wharf, you will find a World War II submarine. It's called the USS Pompano. And I didn't like much staying in the hotels. They were rather antiseptic and extremely expensive. And I found out that I could rent a houseboat down there at Pier 39 where all the walruses were. Tourists came in and out. So I ended up renting a big, long houseboat, about a 60-footer. And other people would come in from the company, and there was plenty of room in there. So we all kind of just bachelored out there when they weren't around. especially at night, I'd have nothing to do, and I'd wander down there and talk to these old salts that were working on it, got to be friends with them, and started doing some wrenching on it. In 1995, actually got to work on two things, part of the special effects for a movie. That movie was called Down Periscope, and I met Kelsey Grammer on that movie, and also was told very, very clearly not to bring up the shark issue. And I said, "What shark issue?" And then, of course, everybody told you. And I said, "Oh, that's interesting." So I always remember that. But it was kind of a interesting movie. Came out in, 96 or so. But I used to go down there and hand the old salts that actually used to sail on those. Kind of interesting. Anyway, just a aside. Large crabs at Pier 39. Anyway, I spent months at a time down there. It was always very interesting. On a market day like this, I think that really isn't moving much. I kind of have a ability to wander around a little bit. But I got a picture of it here. I'm probably not going to come out real good, but you can see it here. Welcome to the USS Pompano. SS 383. So anyway, I'd hand wrenches to these guys at night and help them work on it. And it's open 7 days a week there. Always interesting. But spent a lot of time there. Spent a lot of time going out to Alcatraz. When you're bored, you're especially stuck for weeks at a time in a city, and you don't know a lot of people. You know some people. Always need to go and do some stuff. Anyway, things in play out here when we go back to the market. The FTSE was off 0.4%. Germany was off 0.1. France was up 0.1. Spain was off 0.2. Portugal off 0.3. Italy off 0.1. And the Irish up 0.1. So very, very flat. We're pretty much doing the same thing. Other stocks of interest. BlackBerry, somebody went out there and posted, I suspect, another phony article about the BlackBerry selling extremely well. And this thing's just very short, probably still 30 or 40% short interest. Doesn't take a lot to get everything going. That they sold anything is probably a miracle. But the question is, how are they going to compete going forward? This is a war of attrition, and of course, all they're going to get is attritionized. I think this thing may bounce back up to that 1050 level or something like that. Would not be surprising. But this thing is pretty much one of the Walking Dead stocks, and probably not a lot happening else out there. Fossil is a little off. FOSL. This thing has been weak forever. I suspect this thing is going to fall apart. This thing was about 19 cents shy of its previous high today. Or yesterday, excuse me, no, actually Thursday. February 12th, this thing hit $115, 19 cents, 3.7 million shares. How this thing has held up on the kind of disgustingly light volume this thing has had. But of course, got 20 cents of it on Thursday, and with 1 million shares against the previous high out here of 3.7 million shares. Very interesting. But this one's always looked weird, mostly longer term. Let me see if I can look at that because of the gap on this thing. Let's turn on gaps here. This thing's got just a massive gap out here. Came with just bone-crushing volume, and that it even got back up to 115, I suspect, is fairly interesting. But off fairly strongly today. What is it? Off almost 5%. So one to look at there. This thing may be wanting to roll over. I think there's a high probability that we go and fill these multiple gaps from about $80 down to about $66, and probably get down there. You're going to work your way down to this untested low at $62.77. So this one's got some decent range on it if you're looking for something if this market does roll over. And I'm just going to check to make sure we haven't had any real change out here in the market. And the answer is no. We're off 3.5 points, 1.75 billion shares. So volume is at a crawl. we're not doing anything, and it doesn't look like a lot more happening. Facebook, kind of interestingly enough, still got a lot of short interest in it. They're pushing this thing up one more time. It is in the gap down where this thing was as high as $42. And it looks to me like a lot of people chasing this thing back up here at these highs. And volume certainly wanting to roll off. Everything says that this thing at least is going to come back to $34. If you are bullish on this thing, probably going to get a chance at that $34 level. My guess is this thing gets a good chance to get back around the $29 level over time. Again, first move off the bottom and huge short interest really move this thing up. But it's only been around for about a year, so keep a close eye on it. See how much time we have left. Oh, I must have lost something here. Oop. We must have missed a break. We'll be back in a minute.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Stocks that are moving out here today are Baidu, and what do we have? It's off about 4.5%. This thing, it did go through its previous high at 134.71. 5 million shares with higher volume on Friday. It is pulling back in, and we've seen so many of these stocks do that, is breakout on earnings with a lot of times decent volume. In this case, we never got the kind of volume that you would really like to have. You had one day on earnings where you caught a lot of short sellers on the wrong side of this stock, and it has gone up fairly strongly since then. And but looked to me like if you get that close back in here below the 134.71, it is a false breakout with decent volume. But you should be able to last at least 3 days at these higher levels and have volume come back in. Kind of interesting. Looks like this thing probably wants to come back to the 125 level, and the short squeeze for the most part is over in a few of these. We got the perennials out here that are moving. Sears holding off at 3%. Expedia, which has been pretty much rocked on the downside. EXPD. Let's take a quick look at that, see how that is coming out. This thing, this is Expeditors International of Washington, D.C. It's a different one. Could be an ABC down. Fast. C-Trip, another one that blew out earnings. CTRP. If I can actually spell it right. That is right. This thing has gone right up to its gap level with all the kind of volume in the world, but just hanging out here. It hasn't seemed to go that much farther. Let's see if we can see anything else out here. Okay, so what do we have? Well, you've got a higher high out here at 47.54 on C-Trip, CTRP. This thing did go and fill its gap. It's done it with volume. Again, another one of these companies that relies heavily on Asian travel. But that pop normally is fairly good at turning a stock to go sideways. Most of the time, people in charting will call this an exhaustion move, and that is all of the volume, all the energy comes in one day, and pretty much that's it. We saw that on Thursday last week. Friday, volume pulled back. We even have kind of a little pullback here. This thing could certainly come back to the 38, 39 area, fill a lot of this gap. You do have high volume, so probably don't want to short it. If this market was going to break out for some reason, this would be one to be watching at here. But doesn't look like this thing is going to stick at a higher level. Amazon, this thing is probably one of the most puzzling stocks that we have in the market right now. Let's shorten this up a little bit and get a few more peaks out here. This thing, it did make a nice run from 265 all the way up to 313.62. That July 24th low set the move. This thing's kind of been going sideways since then. Volume has pulled back. You do have a nice little gap down here at about, what is that, 292 to 294. I suspect that the way this thing's setting up right now is it wants to come back to that little gap and at least say hi. Amazon, very curious trading out here. Can't actually figure out too much what's going on in this thing. Stocks on the upside. Of course, we talked about Best Buy. RIM or BlackBerry, whatever you want to call it today. Another one that is making a nice move. I was hoping they'd get this one to pull back, and it did test the lows out here at 1247 with much lighter volume. So I guess this probably would have been the buy, and other than I'm a little bearish on the general market, pretty good looking chart out here, and this is Micron Technology. This thing looks like it's probably set up in some kind of trading range from 1460 to 1250. Nice looking chart out here. You had a low on July 11th, $12.47, 89 million shares. You go below it, you close back above it on July 30th, $12.31. with 48 million shares, so almost in there with half the volume. Then closes back up. That would have been your buy point, and probably a nice $1.50 trade out of here, even if you got out of it today. We're going up against the last major high at 1406 that had 38 million shares. You got about 30 million so far today. Is that right? Yeah. So I'd say you're doing okay. Good chance this thing does test that 1460 again sooner rather than later. So what else do we have out here? Netflix up to $5. NFLX. I still suspect we have one more gap up in the stock to set the long-term gap on this. Maybe I don't have it long enough. There we go. I'll reset it here. Okay. So where do we go? Back to that. That's a better looking chart there. Anyway, we've got two major gaps up, and I suspect this thing is making a three-gap play. It may just take forever to get this thing to actually do it. We've got a major gap from 100 to 140, basically 170 to 205, and I suspect we've got we're kind of banging away at some previous gaps that the stock had from about 270 to 285, and I think we're going to gap over that. So we might look at this thing taking one more hit up to maybe $300, and I suspect that's where this thing is going to, the wheels are going to fall off this thing. Especially when we look at Time Warner, and a lot of the arguments are all about cash. Netflix is, for the most part, a big web cloud that signs up content. That content's going to cost, and more as new competitors come into this marketplace, probably going to force Netflix to raise their prices somewhat. And maybe the devil we know in cable is better than the devil we don't know already in streaming wireless servers. Priceline, I hadn't looked at that yet today. PCLN, one of the better moving charts out here on a day that is fairly flat. Yeah, still at, that's right, still at 1706, 1.8 billion shares. Boy, a quiet day. Let's see. Let's get this a little bit. Okay, Priceline is going up against its last major high that had 580,000 shares on July 15th. 926.40. And, we've gone above that. Looks like we're going to close above that. And it looks like we're going to close with higher volume. So Priceline looks like it's ready to take its shot. And let's just look and see what this thing could do on an expansion. And if this is an ABC, it only retraced 38%. That would set up a 1-to-1 that would take you right to $1,000 and 1,010. So that probably would not be a bad setup. You are breaking the B with higher volume today with a good hour and 15 minutes left. So it looks like Priceline will be the first big stock to $1,000. Kind of interesting out there, especially for a market that is flat as this one is. So what else do we have out here? I wanted to just check and see if we have anything else moving on a day when most other things are not moving. Let's take a good look at GLD. We had talked about last week about this thing probably coming back and at least gold, the physical contract, coming back and testing 1275. I suspect it still has that capability. We got down to 1283, but I still suspect that 1275 wants to be touched. We've got a little weakness out here today, so that would be interesting. We've got Martha from Seattle. How are you doing today, Martha?
Just fine, thank you. I got in at Coors at 63, and I'm wondering if it's time to sell it.
Yeah, well, you've got an ABC, and it went right to the ABC number. Are you watching on Tiger TV or in the den by chance?
Yes.
Okay. Where were you thinking of selling this when you placed the trade?
Probably about 69.
I tell you what, you got a 1-to-1 ABC. You've got a little bit of pullback out here today. The volume did not really accelerate as you passed the B point. So I'd probably say I'd be ringing the register and going out for dinner tonight.
Okay.
I don't think that there's any debate in this one right here. The volume was about the same from the previous leg that started out here at on June 24th at 56.15 to the highs out here at 65.11. So I just don't see a lot of reasons to keep this thing. It's probably going to come back to 65.11, and you might catch it for the next ABC up.
Okay, thank you very much.
You bet. That's a nice trade out there, and I probably should have kept her out here just a little longer to find out what was going on. But what a nice ABC setup out here, and she got it at 63. Not bad. I could see getting back in there. When it broke, the one thing that you wanted to see was that 6.6 million share day back on May 30th exceeded 66.18, and you basically had 5 million shares when it went through that high on the 31st, so that you got a couple more bounces out of this thing. Really makes me think this thing's going to probably rocket back down and under that $66 level. So I would say there's no reason why you wouldn't take your money and run. I think you're kind of lucky out here. What do we got time for here? I want to look at XLK. This is the technology sector. With a very light volume market out here, it looks like technology is starting to hit a wall. When we look at the charts, kind of backs that up. The XLK had its May 20th high at $32.31, 17 million shares. Banging against that, actually tested it to the penny today with a 7.7 million shares so far and kind of pulling back. I just don't see a whole lot there. The other thing I dislike is that we really didn't see a lot of volume come back in as we broke around that $32 level, which has been highs just about forever in this thing when we go back to that May 20th high. So when we talked about the last few months, a lot of resistance in the XLK right here, and nothing saying this thing wants to break out with a higher volume. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And, of course, it is Shark Week out here. So let's look and see what the Sharks are doing. Wanted to see after last week how Herbalife did shake out. Of course, Carl Icahn, big long position. Then, of course, George Soros pushing on that now, all going after David Acorn. I can't remember his name for some reason. Anyway, up on very, very light volume today. But not a bad side to be on in the short squeeze. And I don't wonder if we'll ever see a big Wall Street type tell everybody he's got 1 billion shares short of any stock. But what you can see out here is that there is no volume. Even in these short squeezes, the volume is just incredibly light as we look out at some of these other stocks. Netflix, of course, one of the, as Tom O'Brien says, shocks S-H-O-C-K-S, the shocks in the water. And what do we have out here is that the shocks can probably keep these stocks up for a while. The question is whether or not they're going to ever be able to get out of some of these short positions. If you ever read A Reminiscence of a Stock Operator, always interesting to watch these positions and how these titans of Wall Street fight each other. The question would be whether or not he gets a reprieve if they do go back and start looking at these multi-level marketing schemes, and I will call them that. The question is whether or not these public companies that are multi-level schemes get investigated by the Securities Exchange Commission and also the Federal Trade Commission and are deemed Ponzi schemes. One thing you can make for sure is an easy job in an afternoon with a spreadsheet, and you will see that only the top 10% of the people in these multi-level schemes will ever actually make any significant money, and only 80% of the people in one of these have to lose money, just the way that they're set up. But interesting, just no volume out here today. I'd be watching this August 1st. High again. Whatever they get this thing up to, it's going to be just as sweet as Netflix when these things roll over, because when these big guys finally decide to get out of these things, there's going to be some nice movement out here. Netflix probably on earnings. Herbalife, unfortunately, you have to be betting that the Feds come over the top of the hill. So this one could be the Rubicon for Acorn. What's his name? Yeah, maybe somebody says something else. Anyway, we've got about a minute here left in the day. Wanted to make sure that we did look at this volume and see if anything was changing out here, and the answer is no. We're off 3 points on the S&P cash. We've got less than 1.9 billion shares. And I would say that this was a very light volume at the start of 2 o'clock, that we don't have anything at the end of 2 o'clock continues to make me think we've got a volume move in this marketplace. And this is where you can see extremely fast moving markets develop both on the upside and the downside, but that we have broken all-time highs with no volume. My belief would be that of what we saw from Mr. Fleckenstein last week, and that is this is where you can have movements of 2, 3, 4 days and see a 20% move in the broad indexes. So I'm going to try to sit on my hands as long as possible. Remember, it's Shark Week. Stay out of the water.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.